Welcome to the November 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of November 2025, global GDP growth for 2025 has been revised upward by 0.1 percentage points to 3.3%, based on purchasing power parity, as forecasted by Oxford Economics. The recent easing of US-China trade tensions is expected to strengthen economic activity this year. The outlook for 2026 has likewise been raised by 0.1 percentage points to 3.1%, reflecting continued resilience in economic fundamentals. At a country level, US GDP growth forecast for 2025 has been revised down to 2%, reflecting the impact of the government shutdown. However, the 2026 forecast has been revised up to 2.4%, supported by stronger consumer spending and business investment. In the EU, GDP growth for 2025 remains unchanged at 1.4%, while the 2026 projection has been lowered by 0.1 percentage points to 0.9%. China's GDP growth for 2025 holds steady at 4.8% for 2025, but the 2026 forecast has been raised to 4.5%, reflecting government stimulus aimed at expanding industrial activity. Meanwhile, India's GDP growth forecast for 2025 has been lifted to 7%, with the 2026 outlook maintained at 6.3%, indicating continued robust domestic demand. In the first 9 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 1.6% year-on-year to reach 2,619 BCM. Growth was recorded in the EU, UK, and North America, while Asia showed a decline. EU natural gas consumption increased by 11.4% year-on-year in October 2025, reaching 26 BCM. The rise was driven primarily by higher residential heating needs and increased gas-fired power generation. Average temperatures across Europe were 0.6 degrees Celsius lower than a year earlier, with particularly cold conditions in southeastern Europe. Several areas even experienced early-season snowfall, further boosting heating demand. Although wind and solar output also increased, renewable generation was not sufficient to meet the additional load during colder conditions. EU electricity generation saw a 1.3% year-on-year increase to reach 213 terawatt-hours. In September 2025, China's apparent gas demand, which includes production plus LNG and pipeline gas imports, recorded a growth of 1.6% year-on-year to 36.4 BCM. In the first 9 months of 2025, China's gas demand rose only 0.9% year-on-year. China's 15th five-year plan is set to continue market reforms in the oil and gas sector, with a focus on curbing infrastructure monopolies and expanding fair access. In October 2025, US natural gas consumption increased by 1.9% year-on-year to 69.5 BCM, supported by higher residential demand, which rose by 21% year-on-year, as cooler-than-usual temperatures boosted heating needs. In September 2025, global gas production rose by an estimated 3% year-on-year to reach 347 BCM. All major gas-producing regions except for Eurasia recorded positive growth, led by North America, particularly the US. European gas production witnessed a 10.6% year-on-year rise in gas production to 12.9 BCM. This is the first month in 2025 to witness a European production growth after 8 months of consecutive decline in output. Although September is the annual maintenance month in Norway, a decline in the upstream maintenance activity compared to a year earlier supported the growth in gas production. In September 2025, China's gas production maintained its growing trend to reach 21.2 BCM, representing a 9.5% year-on-year rise. For the period January to September 2025, cumulative gas production in China stood at 195 BCM, reflecting a 6.3% year-on-year growth. Meanwhile, in October 2025, US total gas production continued its growth trend, to record a rise of 6.3% year-on-year, to stand at 95.6 BCM. This increase was supported by the increased Henry Hub prices, which improved market conditions, in addition to the rising domestic gas demand and growing LNG exports. Following planned shutdowns and maintenance activities in the previous month, in October 2025, the EU countries imported 12 BCM of PNG. This represented a rebound of 28% month-on-month but was still 9% less than 1 year ago. After 10 months of 2025, cumulative EU PNG imports stood at 118 BCM, a 9% decrease year-on-year. During this period, PNG imports entering via Poland increased by 22% year-on-year, overtaking the Netherlands, while net gas flows from the UK increased by 5%. In September 2025, China imported 7.2 BCM, representing a growth of 3% year-on-year. This marked the 17th consecutive month of year-on-year increases in PNG imports. Total PNG imports after 3 quarters of 2025 increased by 8% to reach 62 BCM. In the LNG market, global LNG imports rose by 8.3% year-on-year to 37.0 million tons in October 2025, marking a record high for the month. This growth was primarily led by Europe, where imports surged by 48% year-on-year to 11.2 million tons, the highest level since March and a record for October. This was driven by robust gas demand and reduced pipeline imports. In contrast, Asia-Pacific's imports continued to decline, falling 5.4% year-on-year to 22.7 million tons, with China and South Korea contributing most to the drop. Meanwhile, global LNG exports reached a record 38.6 million tons in October, marking a 13% year-on-year increase. This growth was driven by stronger exports from Canada, Nigeria, Qatar, and the US, with the US becoming the first country to export more than 10 million tons of LNG in a single month. By the end of October 2025, the underground gas storage level in the EU increased slightly to 86 BCM. This represented 83% of the region's capacity but is 8 BCM less than the 5-year average. With the storage level peaking on October 12, gas restocking this year amounted to 51.5 BCM. In Asia, combined LNG stocks in Japan and South Korea were estimated at 13 BCM, which was 0.2 BCM less than the 5-year average. In the US, the average daily storage level increased to 107 BCM, or 80% of capacity. Net gas injections in the US in 2025 thus far have reached 63 BCM. In October 2025, European and Asian gas and LNG spot prices declined slightly, as robust LNG supply to both regions continued to exert downward pressure. TTF spot prices averaged $10.89 per million British thermal units, down 1% month-on-month and 15% year-on-year. Similarly, Northeast Asia spot LNG prices averaged $10.85 per million British thermal units, reflecting declines of 4% month-on-month and 17% year-on-year. In contrast, US Henry Hub prices continued to rise, averaging $3.19 per million British thermal units, up 7% month-on-month and 45% year-on-year. Looking ahead, spot prices may strengthen as seasonal heating demand increases with the onset of winter. Thank you for watching this short video presentation on the November 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.